All right, it's Monday, August 3rd, 2020, and here is a quick look at the U.S. national real estate market with the Altos Research data that came in over the weekend. The national crisis in inventory actually accelerated this week. We're down to 626,000 single family homes on the market across the country. As has been true since April, the demand for homes continues to be stronger than new supply. Available inventory is shrinking at about 1 to 2% per week right now. Per week. A healthy market would be like 1 or 1.2 million homes available to buy, and we're at 625. New listings volume was at 73,000 this week. It's a little light, but this market is really a demand story. And speaking of demand, we've been spending more time investigating the co-primary homes phenomenon. So as remote workers suddenly don't have to live in the expensive coastal cities, we can now see where they are buying and what they are or are not selling. So places like San Francisco, New York, and Boston are really the only places in the country with growing inventory week over week. Even LA's inventory has been tightening in the last few weeks as LA is a destination for New Yorkers and San Franciscans looking for a better remote deal. We're using the term co-primary because the phenomenon is homeowners in the cities are buying for remote work and life, but they're not necessarily selling the existing home. So, for example, while San Francisco inventory is higher than it actually has been in years, with 449 homes for sale in the city, single-family homes for sale in the city right now, that number is still like 60 to 70% fewer than a comparable size city like Austin or Charlotte, which might have 12 or 1,400 available right now. So it's not like there's some kind of flood of homes coming to market in these cities. So the co-primary phenomenon seems to mean that demand is increasing in the remote areas, but supply is not increasing by nearly as much. So we're going to spend more time on this phenomenon in our hour-long webinar tomorrow, August 4th, and discuss what it means, especially for realtors working with buyers and sellers. Are there opportunities for listings and what to expect with pricing? We'll include a webinar link in the registration link in below if you'd like to join that tomorrow, August 4th. Meanwhile, median home price for the country is at $354,088 this week, just over $354,000. That's basically flat for the third week in a row, just a hair lower. The new listings price is also flat at $320,000. That's no sign of demand weakening anywhere in the leading price data. The demand, we might see if we have that impact from the economy broadening. We haven't seen it yet. The number, for example, of Americans in mortgage forbearance continues to notch downward each week. So this is good. As people regain their ability to pay, they are coming out of the forbearance program. A tiny sliver of those who have ended forbearance had to opt back in. So that's a signal that we can look for if people who thought they were weak on their ability to pay are now again feeling that risk. That renewal number will be important to watch if the next round of stimulus fails to materialize and the economy tanks harder again. And we'll also look at that October renewal window. That'd be 180 days. And we'll see where things fall in October in a couple months. So that's the news this week. Crazy low inventory keeps falling. The co-primary home explosion is underway, and home prices continue to stay at their elevated levels. And the leading indicators are all saying that they should stay at these elevated levels at a time of year when they normally would be pulling back. As always, feel free to stop by the altosresearch.com website to deep dive into the data or to see how Altos work in your business. Subscribe to the YouTube channel for these videos as well as the longer ones, recordings of the webinar. But come by the webinar tomorrow if you're a realtor and you want to talk about how do we frame this information for clients. Everybody wants to know, and everybody's got opinions of what's going on. So we'll spend some time with that tomorrow. And otherwise, more next week.